Hi, everybody. I'm Scott Stanford. Welcome to the Infrastructors. This is the premier podcast for engaging conversations with influential thought leaders in AI, tech, government policy, and smart city innovation. Today's guests are the Chief Insurance Officer at the Insurance Information Institute and President of the Insurance Research Council, Dale Porfilio, and the Assistant Vice President of the Insurance Research Council, Vickie Kilgore. Dale and Vickie, thank you guys so much for spending a little time here on the Infrastructors with us. Listen, first off, I got to know, Dale, tell me about the Insurance Information Institute and the Insurance Research Council. What is the mission of both of those organizations before we get into this?
Sounds great, and thank you, Scott, for having us here on your podcast today. I'll give you a quick history of each of the organizations. They each have their own foundation and their own mission here. The Insurance Information Institute, or III as we abbreviate it because it gets a little lengthy, was started in 1960 when the insurance industry, a number of different carriers decided it'd be good to have somebody who can speak on behalf of the industry and give a broader perspective than any one single company can. So we state our official mission now as we're a trusted source of unique data-driven insights on insurance to inform and empower industry stakeholders and consumers. The Insurance Research Council, likewise, was created when different insurance companies said, if we came together and shared our claims data, could we perform some research that each of us as an individual company may not be able to do? And in 1977, they came together to start looking at auto injury studies. And that's always been the kind of marquee research that the IRC has done. We do other research as well, other topics, but we really focus on providing that timely research and valuable insights on public policy issues in the property and casualty insurance industry.
Okay, so, we're talking about, driving safety around the country. Obviously, auto insurance is one of the first things that come to mind. Vickie, I'm one of those guys that, I can't sleep at night if I don't have my auto insurance or my health insurance paid up. I won't get in the car if my car's not inspected. How pervasive is driving without insurance in the country? I mean, is it happening more often than we think?
That's a very good question, Scott, and that's one that the IRC has been researching for more than 40 years. There are obviously many different ways to measure the pervasiveness of driving without the auto insurance. You can do public opinion surveys and ask people. You can compare registrations to aggregate insurance claims data. You look at police reports, accident reports. All of those have their advantages and disadvantages. One consistent disadvantage is that they're not always consistent across states or across time. The IRC, since the early 1980s, has been looking at an insurance claims-based method for looking at this issue. We basically look at the frequency of uninsured motorist claims, which is when, for instance, I would be filing a claim because I was injured by a driver who did not have insurance. The ratio of the frequency of those claims to bodily injury claims, which is when my insurance needs to pay for the injury that I caused to someone else. So the ratio of the uninsured motorist to bodily injury claim frequency is what we refer to as our rate that we've been calculating over time. And literally that means the likelihood that a person injured in an accident was caused by an at-fault driver. So all of that prelude to say that in our latest study, which had data through 2019, we found that the uninsured motorist rate was 12.6%. So 1 in 8 drivers by this measure in the U.S. in 2019 were driving without the required insurance.
That is now. Do you see this when you do the research? Is this like a regional phenomenon? Is it more prevalent in some states than others, or it's kind of just fairly equal across the country?
Oh, it absolutely. The percentage of varies significantly across states. In our 2019 study, we saw that the rate ranged from a high of 29.4% all the way down to a low of 3.1%. Some states can show variation over time, but we will see some consistently states at the top of the range, Mississippi, Michigan, although Michigan has been coming down a bit, Tennessee, New Mexico, Florida are all states where we have seen high rates. New Jersey, Massachusetts, New York, Maine, In 2019, those states all had rates below 5%.
You know, this might be a silly question, but are there some states that more highly mandate auto insurance than others where, you know, it's a little less strict in some states throughout the country?
Well, nearly every state in the U.S. Requires some form of auto insurance. The exception being New Hampshire, I believe, is the only state where you are not required to actually carry the insurance, but you are required to prove that you are financially responsible if you do cause a loss. And of course, one of the easiest ways to do that is to obtain insurance. States do vary with the amount of insurance that they require. Nearly every state will require you to carry bodily injury insurance so that you could pay for injuries that you caused to someone else, or property damage liability insurance so you could pay for the physical damages that you might cause to someone's vehicle or property. But as I said, the amount of insurance requires is widely variable, some as low as, say, $10,000 in bodily injury insurance, all the way up.
You know, Dale, let me ask you this. When it comes to determining insurance rates, you know, I was just looking before, and you could look at 6 different companies and have 6 different rates offered for the same driver. How are those rates determined?
You know, Scott, it's a great question, and it probably could deserve a podcast entirely to itself because it's complex enough.
Yeah.
But I'll try to give you a short answer to it. Every company goes out and comes up with their best estimate of what future losses are going to be, because insurance pricing is prospective, meaning you're trying to predict for the policy you're going to buy today, what do you think the loss experience on that will be for the year ahead or the 6 month ahead, however long the policy is. So that future insurance price reflects that expectation of future losses, plus the expenses to run the policies, as well as some amount of profit margin. So the complexity comes from looking at historical losses, which every company has their own historical loss database, to then predict future losses. And then it gets one step more complex, is that we then have to say, this is what you might need for the book of business in total. But how should that differ for you, Scott, for myself, for Vickie, any other drivers? How do you compare an 18-year-old driver to a 65-year-old driver? Different cars, different streets, different driving behaviors. That's the complexity when you then try to distill it down to each an individual risk. And we're always trying to align the relative risk of that policy to every other risk that's out there on the street.
And when you talk about, you know, people who are on the roads without, you know, car, automotive insurance, does that affect the rates that I might get based on the number of folks that are out there without insurance altogether?
It definitely does, because the reality is policyholders are required to purchase uninsured motorist or underinsured motorist in most states because we want to make sure that we can make somebody whole when an accident happens. And so if you are purchasing insurance and there are people on the road that are uninsured, insurance companies have to make sure that they're charging something for those future losses that will be uninsured. To link that back to what Vickie shared earlier about the greatly differing rates of uninsured motorist in each and every state, if you're in a high state like Mississippi that you quoted at the top of the chart, insurance companies are going to have to charge more because close to 30% of the time, somebody's involved in this claim that caused the claim and they don't have any insurance to pay for it. Whereas if you go to a state that's on the low end, like New Jersey, you don't have to charge as much there because most times when an accident happens, insurance is there to pay for it.
Gotcha. It's a straight numbers game. You know, Vickie, when it comes to enforcing insurance status, right? How is that actually enforced? What kind of technology are we talking about here?
In the old days, certainly the only proof of insurance that you had was a physical card that said, yes, I am insured by Acme Insurance Company. You may be required to show that at a traffic stop or perhaps when you're registering or renewing the registration on your vehicle. There have been advances in data technology so that in some cases computer databases are maintained where an insurer is required to submit to the state when a policy has been canceled before time. So you get around the problem of someone taking out insurance, getting their card, and then subsequently canceling it. Certainly data technology has advanced with more sophisticated online verification systems. States are able to monitor who has insurance compared to who is driving on the road.
Listen, they make it very easy for you for, insurance and car registration and license now. Everything is done online, so they have records, right? Here's the thing that strikes me, Vickie. If somebody gets into an accident, even a fender bender, and they don't have car insurance, or even if it's a major accident, but they're able to take off from that accident, if you don't have car insurance, are you more likely to be like, okay, I have to get out of here because I don't have insurance to pay for this?
Well, certainly we don't have any data that might be able to speak to that decision that someone might make. And personally, it just seems like, well, you're only compounding your issues if you then flee from the scene of an accident. But certainly there can be serious consequences if you were found at the scene of an accident without having the mandated insurance.
Yeah, what are those? I was going to ask you that. What are the actual consequences these days?
Well, obviously, there are financial consequences to yourself by not being properly protected against losses that you may cause or experience. But there are some serious legal consequences as well. And those, as a common refrain here, can vary by state. But certainly the penalties could include fines, suspension of your license, having your car taken away from you, in some cases even jail time. And in some states, you may have financial consequences under what's called no pay, no play laws, where your compensation for injuries that were caused to you may be limited if you, in fact, don't carry the required amount of insurance. The degrees of the penalties can vary, as I said, state to state, but also depending on the situations in which this is your first time or a repeat offender, or is it a minor traffic stop versus an accident? So that can also have an influence on the severity of the penalty.
Right. Okay. Dale, what do you say to those folks who firmly believe that, enforcement of insurance, the requirements essentially are going to target people who can least afford an extra expense like car insurance? What do you say to those folks?
Well, certainly paying for auto insurance every year can be challenging for some drivers, especially if you have young drivers. It can get very expensive very quickly. But the financial hardship from causing an accident when you don't have insurance can be even greater than the cost of the insurance premium itself. The reality is insurance exists so that people can have the peace of mind that when they do get in an accident or when they have a loss of some type, that the insurance company is there to make the person whole. And if you're out driving without insurance, then you're not in a position to help make somebody else whole if you do cause an accident. And that's why, as Vickie just described, there are consequences for that, because it is important to make sure that we share that social responsibility. So is it tougher for people of lower income means? Certainly. It's harder for them to buy gas, to buy food, to pay for insurance or anything else. And those are broader societal issues. But in the insurance industry in total, and certainly a focus for both III and the IRC, it's focused on how can the industry reduce overall losses, because that allows insurance to be more affordable for everyone. You asked me earlier about how do you price. Well, it all starts from what are the expected losses. If we expect fewer losses, then premiums can be lower for everybody. And that is a win for the society in total.
There's a national conversation going on right now regarding unintended consequence of police stops for minor traffic violations, like driving without insurance. Do you think treating an insurance violation as an administrative matter as opposed to like a law enforcement function makes more sense?
I'll answer this question personally. Neither III nor the IRC has a position when it comes to law enforcement and that sort of thing. But I'll offer you my perspective. Obviously, over the last 2 years, this country has a lot of different perspectives on what law enforcement should and shouldn't do. But when I think about the insurance industry and what are we here for, it is an administrative issue to say that it is a requirement that people have insurance, at least in all states other than New Hampshire. And that's an administrative problem when people don't. There are enough complexities going on when law enforcement has somebody by the side of the road, whether it's after an accident or a public safety concern. I certainly would far prefer that they focus on the needs at hand, the public safety that's occurred, the accidents that may have occurred, rather than having to deal with an administrative issue like, do they have insurance or do they not? That to me is not the right place or time to try to enforce a legal requirement around insurance.
Yeah, and Vickie, to that point, technology in Oklahoma is essentially replacing police stops and identifying motorists on the road without insurance, right? So it's just the technology. Do you know of any other state or municipality that's really tried to tackle the problem of driving without insurance? Would you like to see it done more that way with the technology?
I certainly don't have the expertise to speak as to what the approaches that other states are taking. I do know that technology really has the opportunity to make this a much clearer issue. Certainly, the insurance companies have the accurate records to be able to show who has insurance and who does not. The issue comes down to communication between the insurance companies and the departments of motor vehicles and eventually law enforcement. That communication does occur. It's effective. It's not always the most efficient that it could be. Things such as the Risk Stream Collaborative have been exploring ways to use such a like blockchain technology to be able to facilitate that communication. And certainly there are other applications such as that I think could be a bright future for controlling this issue.
Dale, I want to come back around to that population you folks are talking about. We have to defer specific methods to regulators and legislators. Is that something that's an important piece of function for you guys right now?
It certainly is a priority for both III and IRC that insurance be available broadly and that more people choose to purchase the insurance they ought to. We are here to be financial first responders. And so making sure that people can get access to and purchase the policies that they ought to is certainly very much in our mission and what we're seeking. So whatever we can do societally to make that happen, and an efficient and effective means to do so would be a positive change.
Do the auto insurance companies look to you guys for your research and input before they come up with their rates state to state, or no?
In terms of coming up with their pricing, not typically. When it comes to pricing, that's typically done based on their own insurance company experience. So they may come to us to think about how to process claims, how they might want to process claims differently, how they want to treat different things. But in terms of coming up with price, typically they're starting from their own loss experience.
So basically, you need to live in a state that has a lot of folks who are insured automotively and not too many accidents, like the good folks in New Jersey is basically what you're saying.
It certainly makes a difference. I mean, when it comes to affordability, it does vary greatly by state. Just as Vickie described uninsured motorists and how much that varies by state, affordability does too. And it gets around to when you're starting, you ask, how do you price? You start from losses. And so if you're in a state that has a lot of losses that occur and it costs more to pay for those claims, you can expect premiums are going to be higher. Losses drive premiums. More losses, more premiums.
Beautiful. Dale Porfilio, Vickie Kilgore, Insurance Information Institute and Insurance Research Council. Guys, thank you so much for joining us here on the Infrastructors. Great information. Taught me a few things, and hopefully I'm not paying too much. I'm a New Jersey guy, so I think I have good rates right now. But thank you guys so much for joining us. Really appreciate it.
Scott, thank you very much for having us.
Oh, my friends, that's all the time we have today here on the Infrastructors. I want you to join us next time for our conversation with the Deputy Director of the California Office of Traffic Safety, Timothy Weisberg.